Meet the president and CEO of the new community bank on the South End. Coming up next on Carolina People. Good morning. Welcome to Carolina People. This morning we're at the Herald offices at Myrtle Square Mall. We're focused on community banking, and we're visiting with Tommy Bouchette, the President and Chief Executive Officer of Sunbank. Good morning, Tommy.
Hey, Greg. Thank you for having me.
Now, that is a firm handshake. Very strong guy.
Well, I don't know about that, but
that may tie in with you grew up in Andrews.
that's correct. Yeah, just on the other side of Georgetown.
Very close to Andrews.
Williamsburg County, actually.
That is in Williamsburg County.
Well, Andrews is in Georgetown, but where we grew up in the shopping area, it was Andrews, but it was actually Williamsburg County.
What was that like growing up in Williamsburg County?
It's a world away from being in Horry County or in the Myrtle Beach market area. Wonderful lifestyle. I was blessed to have a good family, good parents, and learned a lot of important principles and disciplines that's helped me, through my life. So.
Tommy, I see a lot of buses on the Strand oftentimes bringing folks in from Williamsburg County and Marion County and adjacent counties. Did you come into the Strand a lot growing up, or? No,
not really. Most of the folks during that time, it was agriculture was a big industry during that time, and we had tobacco markets that were in some of the surrounding cities, and of course we grew tobacco, and I grew up working in tobacco. So as a result, our shopping area was some of the local towns like King Street, Hemingway, Georgetown.
Right.
Yeah.
So you grew up working in tobacco. Was that your first childhood job?
Oh, yeah. Well, we had a little farm, so I really can't remember the first job, but as far as getting paid by a third party or paid by someone else, it was working in tobacco for someone else.
Well, what's happened in farming? How has it progressed since you were growing up on a farm, or particularly tobacco?
Well, the tobacco industry has become pretty much something that is managed and handled by large corporate growers. And there's been a movement underway now for several years to be able to buy out small tobacco farmers. And I think it's just about coming to that point. But it's just been a world of change, and it's become like a lot of other industries. Large corporate producers, small individuals have a hard time making any type of farming practice at this point.
How did you go from growing up in a tobacco setting, in a farm setting, into banking, Tommy?
Well, I always tell folks I kind of got in banking through the back door. Got out of high school. Before I got out of high school, decided I wanted to get off that farm, and I got a job as a delivery boy for a TV and appliance store. And from there, got out of school relatively early, and then got a real estate broker's license. And from that, I was able to get a job at farm credit banks, and took some training programs they had, and instead of staying in their appraisal part of the business, we went into lending. And from that, I got a job with South Carolina National Bank, which subsequently became Wachovia. And Wachovia was still well known for doing an excellent job of training their credit officers.
And when you say training their credit officers, what exactly does that mean?
Well, banking has different sides of the business, if you will. It has lending, and it has deposit operations, and just a lot of things that make a bank work. But credit officers are the guys that most people see in their community doing the day-to-day work of making loans. Most banks derive most of their income from the lending process. So if you're a credit officer, you're involved in the extension and approval of the credit process.
Okay.
And then can be defined between consumer, commercial, or what have you.
So oftentimes there's a credit officer who just works on consumer or just on commercial and doesn't overlap a lot.
That's correct, particularly in the bigger banks. Now, in a small bank like I'm in today, we service our customer, period. It doesn't matter if it's a consumer loan or a commercial loan or whatever their need is. We're focused on that individual customer.
How many different types of banks are there, Tommy? You talked about a farm credit bank, and obviously just last week there was someone from a different type of financial institution, a credit union owned, and of course there's community banks, and then regional and super regional banks.
That's correct. Depending on where you live at, there's types of banks that will fit the need for that community. But you got farm credit banks, which is really an institution that only lends money to farmers and tree farmers as well, people that have large tracts of land, and that's pretty much what they specialize in. Then you got, of course, credit unions, and they're member-driven in terms of trying to provide a need for loans and deposits to a special class, typically, even though nowadays it's not that way. Nowadays, if you're living in a certain geographic area, even, you can become a member of a credit union. There used to be a real big difference between S&L, savings and loans, and commercial banks. Those lines have kind of merged, but each financial institution typically has a different set of regulators. For example, we're a commercial bank. We still do consumer loans, but our primary regulator is the OCC, which is the Office of Comptroller of Currency. Okay. The S&Ls have a different agency that regulates them, and credit unions also as well. And then you have a state chartered bank versus a national charter.
Are you all state charter or national charter? Okay. And what would be the prime difference there? One's overseen out of Washington, one's overseen out of Columbia or Raleigh?
Yeah, to some degree. But for example, they all have field offices. But if you're a state chartered bank, then your primary regulator would be the State Board of Financial Institutions in the state where you do business. Mm-hmm. If you're a national bank, then the Office of Comptroller of Currency regulates your activities and kind of serves as the watchdog, and they come in and do audits. But at the same time, if you're a state bank, you also have examinations annually by FDIC, which provides the insurance on deposits. The national banks only have to deal with one regulator, and they come in every year and do audits and do reviews, and then they something called call reports we have to fill out every quarter. They examine those pretty thoroughly as well. Banking is probably the most regulated business there is.
Why is that, Tommy?
Well, Greg, you deal with other people's money. Mm-hmm. And when you're taking other people's money and that level of trust is inherent in that relationship between a banker and his customer, it has to be regulated to make sure that you don't have folks doing something they shouldn't. Mm-hmm. So because you have the privilege of dealing with other people's money, I think it's only reasonable that you are regulated.
Mm-hmm. Mm-hmm. Now, would the state banks have to fill out those quarterly reports as well?
Oh, yeah.
Okay, so everyone's doing those.
That's correct.
Everyone's doing those.
Yeah.
And how many, for instance, would there be lots of, who would be some examples of state banks, let's say in Horry County or in Georgetown County?
A good example would be Horry County State Bank.
Okay.
And there's no real difference in, it just depends on how you get set up. There are some other reasons that, you may choose to have a national charter versus a state charter. A lot of it depends on when you were starting your bank. Mm-hmm. If you've been around a long time and you started off maybe as a small bank, with intentions of being defined to a geographic area, then maybe it makes more sense to be a state bank for you. Mm-hmm. Mm-hmm. A national bank gives you the opportunity to do some things down the road a little bit more effectively.
Mm-hmm. Mm-hmm. But the state bank wouldn't force you. I mean, would I be correct? You may not know. It seems like Horry County State Bank may have expanded in North Carolina, Tabor City.
That's correct. You're not limited now to just that one state that you happen to be chartered in. You have to get permission, and you have to go through your state charter to expand in other areas, but you can do that.
So many viewers talk, and when I'm talking to folks, just how does a loan get made? What is it? Is it collateral always that is the big kicker? Is that the big focus for y'all?
Well, Greg, that's probably one of the biggest misconceptions I think that people have about banking is that collateral drives that loan decision. In reality, a good banker will not look at collateral until probably the last part of his review process. Now, having said, from a decisioning standpoint, in other words, you need the collateral. You have to be able to secure the loan, depending on how much money is involved in the terms. Mm-hmm. But the first thing you do is look at character. And, of course, you may have heard about the 5 C's of credit, and there's 5 C's being, collateral, capacity, conditions, and you look at each of these different type of issues separately. Mm-hmm. If you can't get past the character issue, there's 2 things that everybody has to have in order to be able to repay a loan. Mm-hmm. They have to have the repayment capacity to be able to do it, mm-hmm. but they also have to have the desire to do it. Now, unfortunately, particularly in today's world, there's people that does have the capacity to repay, or what we call it the ability to repay, mm-hmm. But they may not have the desire to repay.
They just don't want to repay at all?
Well, I mean, once they get the money, they prefer not to have to pay it back. Right. Now, having said that, in most cases, that's not the way it is. Most people enter into a loan and they fully expect to pay it back, and they have the desire. But unfortunately, at some point during that loan, they don't have the ability to repay it. But we look at that collateral and make sure that it makes sense for what we're doing, also based on term. There's a lot more inherent risk in a 90-day note, for example, than it is in a 10-year loan, because things happen over time. So the farther you extend the time on a loan, the more risk you bring into the bank. And that's where the collateral piece comes into it.
Okay, so the longer the loan, the more risk.
Sure. Bankers are risk managers. Everything we do in our business has some element of risk. Most folks would probably think that the primary risk would be in the loan department. And that's true to some degree. But I worry just as much about operational risk. In other words, what happens at that teller line? Fraud is a big issue for us, more so than it's ever been. We have seen very good bank cashier checks, or drafts, as they used to be called, coming from people that they have very carefully defined how they're going to go out and do a scam. In other words, they will print bank cashier's checks that look as good as any you've ever seen.
Is that right?
Yeah. And so in the old days, you would see a bank cashier's check and you thought it was good as gold. Not necessarily. So you have to be, alert to those things as well.
Yeah. How do y'all monitor that?
Every situation is different. We try to empower our people to be able to make good decisions. But, at the end of the day, Greg, the only way to monitor that risk is to know your customer. And a community bank is better suited for that, probably, than a larger bank in most cases.
Yeah, talk about that. Why would a community bank, is it because the folks stay within that institution for long periods of time? Or, why would a community bank be better suited to know their customer?
Well, part of it's because you have a smaller customer base to some degree. But community banks now, and because of the acceptance of community banks, they probably in many markets have just as big a customer base or market share as large regionals do. But the difference is, in a small community bank, you don't have the turnover typically that you would have. For example, a banker working for our bank, our philosophy is to pay them and reward them enough that they don't have to worry about climbing a corporate ladder. 20 years from now, we want the same people doing business with you that started off with you. In my career, I was fortunate enough to work for Wachovia, and they're a great institution. Learned an awful lot from them, very appreciative. But, it was kind of, you understood that you had to kind of climb that corporate ladder, and that meant moving around from one market to another. And, for someone that doesn't really want to pursue that, we think community banks offer a better alternative.
It's so fascinating to see how folks move from large banks into a community bank setting. Later this week, David Morrow from Crescent Bank will be with us, who's been with large banks. Last week, Walt Standish was with us, who spent almost 3 decades within a number of banks that eventually became Bank of America. And it's fascinating to think of that aspect. It would seem like someone would have to have, did any of the folks who are in community banking have a background in smaller community banks, or who are heading up community banks now beforehand?
Well, I think when you've been in it as long as Walt or Dave has, through the years they've worked for banks that were so much smaller that even though they may have left a large regional, or in Bank of America's case, a national bank, that they picked up that experience they need. In my case, I worked for Wachovia pretty much all my banking career, and then went to work for a small bank that only had about $100 million in assets, 3 or 4 banks, 3 or 4 branches, and they were in a rural marketplace. And it provided me just a wonderful opportunity to understand community banking before we were able to organize Sun Bank.
Yes, absolutely. Well, let's talk about that. We've got about 10, 12 minutes. Tommy, let's talk about organizing a bank. How do you go about doing that? For viewers who, hear about a bank coming up, I think we recently saw a Tidelands Bank down in Mount Pleasant had an offering or a prospectus, and they were soliciting for folks to invest. How does a community invest in a bank? Or are there ever still opportunities? And how do you go about starting up one?
Well, it can be a very challenging process. And there's a couple ways to do it. For example, you could organize a new bank in a given marketplace under the umbrella of a larger holding company. We have a holding company, for example, but we're a single member bank within our holding company. When we started Sun Bank, we set up a holding company referred to as Sun Bank Shares. Now, what that does for us is it gives us the opportunity down the road to start up other banks in other communities should we decide to do that. So let's say that 10 years down the road, Sun Bank Shares goes into Wilmington, and it's always a people-driven situation. Starting a new bank is referred to as a de novo process or a de novo bank. In our case, we chose not to be affiliated with another bank, so we're totally independent, totally local. We're not a part of another holding company bank. But one way you could do it is to get yourself aligned with a bank that's already in existence, that has all the backroom operations, that has plenty of capital, that has everything you need, and then go into a community, create a local management team, and sell some shares from that larger bank's holding company into that community. That is a very quick jump start way to go, and it works very effectively. Again, it's kind of like charters. It depends on what your long-term objectives are. In our case, whenever I was at the Citizens Bank, I decided to start talking to some folks, and I was fortunate to sit down with Dalton Floyd, which is a prominent attorney and also the chairman of our board, and he and I started putting together a team of other organizers, and that process took about 8 to 12 months typically to get your charter approved. Now, you have to have capital, and typically the way you do that is sell stock. And we had an IPO in our case, and sold stock to start this new bank.
And typically, who are the folks who buy the stock? Or is it just folks in the community, or would it be folks in California?
It could be either way, but predominantly, at least in our case, it's local folks. I mean, we may have a few people that's a relative of someone living in our market area, and they may buy a few shares, but typically it's local people.
Do you think you could write a book on it now?
I could write a book. I don't know if it would help anybody or whether it would be right or not. I always tell folks, I still don't know the right way to do this, but I can tell you a lot of the wrong ways to do it. And believe me, it's like building a house. And I've had an opportunity over the years to, to build 4 or 5 houses because we've moved around a little bit while COVID. And each time you get a little better at it. Each time you learn some more. But certainly we would do some things differently, but overall we've been extremely pleased, and things have gone very well for us.
And Tom, you said we moved around. Who else is?
Well,
my
wife and I.
Yes.
2 children. Actually, I'm a granddad. My daughter has a small baby, and I've got a 16-year-old son.
Congratulations.
Thank you.
That's fantastic. And y'all have been married how long?
22 years.
Is that right?
Yeah.
Where's your wife from?
Andrews as well. Yeah.
Y'all grew up together?
No, not exactly. I was managing a little retail business when I got out of school, and she came to work for us, and we got to know each other, and dated for a couple of years, and eventually married.
That's fantastic. And you're now a grandfather. What's that like being and you're so dang young, Tommy.
Well, I tell people I've got a lot of mileage on me, though. But yeah, it's wonderful. Of course, I've enjoyed both of our children, and spent as much time as I could with them, but there's something about the grandchild that just makes it special.
Just yesterday, John Charles was with us, and it was so exciting because his father-in-law, Ed Young from Florence, has been on the show a number of times. One of the great things he pointed out, and as John and I talked about briefly yesterday, I hate to point it out back-to-back days, but, when asking what's the greatest aspect about being a grandfather, he said, Greg, that term grandchild is right on the money. It is a grandchild, and that must be very special.
Well, and I think as you get a little older, too, you really start to realize what's important. I know when my son especially was real small, I was trying to build my banking career, and again, I spent as much time as I could with him, but as I get older, I realized there was days I should have spent even more time, and so I think your priorities start to change as you get a little older.
And some of the regulations that are involved, are there lending limits? Do you all have regulations? I mean,
absolutely.
So there would be some distinctions or sizable difference between a community bank and a large mega national bank.
Sure. We're able, a bank our size, for example, we can generate a loan for $1 million. That's our legal lending limit. However, we also have the ability to generate a $10 million loan because we do it through participations with larger banks. We have several correspondent relationships with large banks. So, we recently committed to a $5 million credit facility, and we participated at $4 million out with a larger regional bank. Now, that's transparent to our customer. We do that all in-house.
So and Walt and I talked a little bit about that last week, and they're involved, and I think they must have similar lending limits as y'all do. They're involved in a large loan just as well now, and they've shopped out a good bit of that. Does that happen? I mean, it seems like I got a mortgage on my house, and it was with First Union. Next thing I know, Countrywide and California had it. Why does that happen?
That's a different type of lending. You're referring to, typically when you refer to your home mortgage, those are sold on the secondary market. And remember, I said earlier we talked about risk. Well, not only do you have credit risk, operational risk, but you have rate risk. So today, for example, when the interest rate is at a 40-year low, if I go to you and make you a 15 or 30-year fixed rate at the bottom of what we refer to as a rate cycle, what do you think the likelihood of the cost of funds, that is what we have to pay for our money, going back up higher before your loan ever pays out? Well, it's pretty high. So we can't take that rate risk, and we'll get upside down on rates. So consequently, most banks that originate these type mortgages, residential mortgages, we sell them off into the secondary. And then insurance pools, large companies end up with those just as securities, and they get what they call the coupon, but basically interest rate on those securities. So very few banks will take a 15 or 20 or 30-year rate risk and keep it in-house. Now, on commercial loans, that's not the case. Or consumer loans, you keep those in-house.
That's interesting.
Yeah.
Tommy, I've noticed recently in a lot of print ads, Wachovia has been doing the Uncommon Wisdom push, and I've seen pictures of Dale Zeglin, the market president, and Nick Scherfese, and under Nick's picture it now says community banker.
Yeah.
How has that worked that Wachovia, or formerly First Union, Wachovia now is working hard to utilize Nick into getting in as a community banker? What exactly does that mean?
Well, in the late 90s particularly, there was such a big push for mergers and consolidations, and the big banks, in their effort to grow their institutions and increase their franchise, their footprint, as it's referred to, lost that personal touch. Well, there was community bankers just like myself, and we went in and saw that niche, and we tried to exploit that the best we could. As a result of that, the bigger banks have realized that they need to also appeal to what most people want, and that is they want a relationship. One thing that we push in our bank is that we're not a transaction-driven bank. That is, I'm not concerned about just doing a transaction with you. I want a relationship, and that fits into the community mode.
I think I saw a quote that you had, and it may have been the Coastal Carolina Business Journal, when talking about the Sunbank facility, whether in Georgetown or Murrells Inlet. This is our house, and we treat anyone who comes in as a guest. And the writer of the article was very persuasive in talking about y'all have a fireplace in there. There's maybe even a little library. There's a community room. Y'all have done some things to make it like Barnes & Noble.
Well, to some degree, I guess. And a lot of times when folks walk into a bank, they may be a little bit intimidated, particularly if they're not accustomed to going in. And what we try to tell our folks is creating a mindset. If you were at home and your favorite aunt or your favorite uncle came in your house, how would you treat them? Wouldn't you greet them with a warm smile? Wouldn't you offer them a cup of coffee? Wouldn't you try to make them feel welcome? Well, that's what we want to do when they come into our institutions.
Now, had you all decided that? How does that work within the board? Do you all decide that as a board? Do you all seek things out in other banks? How do you all come up with great ideas like that?
Well, we're blessed to have, including myself, we have 15 board members at the Sunbank. And they're all local business people that have been around for years, and they believe that you treat people right and they'll do business with you. And we just adopt that philosophy. But we have a great board, and they're in this for the long haul. They want Sunbank to be a community bank that's here for a long, long time. And we're more concerned about building relationships today than we are just growing for the sake of growing. Down the road, if you treat people right and you build those relationships, the growth will come.
Tommy, I think I saw that you were the past chairman of the board of the Georgetown County Chamber of Commerce, past president of the Pawleys Island Rotary Club, now president and CEO of Sunbank. How do you have time to do it all?
You just get up every morning and try to stay focused, but at the same time, you just have to learn what's important and try to get the things that's important done every day. You never catch up. There was a time in my life when I tried to, at the end of the day before I went home, I tried to make sure everything was done. Well, just can't do it anymore.
Oh, yeah.
But you've got to do the important things, and we try to focus on that.
I was talking to one of the folks in the bank, Chrissy Thompson, this weekend, just asking about her boss, and she said, you start talking about Westerns,
oh, yeah.
and you were home free. What
Well, I don't.
We got a couple of minutes, Tommy.
Okay. Well, I don't have very many vices, but if I have a vice, it's that when I was a child growing up, Gunsmoke, Bonanza, those type movies was very prominent, in the late '60s, early '70s, and I just never got away from them. And that's about the only TV I watch, anymore. If I turn on, TV and I can't find Gunsmoke or Bonanza, then I go on to something else.
We don't have too many westerns on Fox 43, Tommy. I hate to say it.
You need to get them.
So you are not tuning into the station very often. Wow.
Well, if you'll start running, Andy Griffin, of course, I love Andy
Griffith, absolutely.
But if you'll start running those programs, I'll watch it more.
We got a viewer. I love it. That's fantastic. And what was it about westerns that really roped you in, that helped make it a vice?
I just loved, I guess, the freedom those guys seemed to have, and of course people like John Wayne, they always did the right thing, and they're always good to people, and they were always honest, and I don't know, it was just that lifestyle suited me. Does
your wife Ann share that love?
No.
Nobody,
nobody but me.
So I'm a Daddy has his own TV in his own room.
Well, I have a lot of tapes. Through the years, I never get a chance to watch them, so I'll have the VCR record old episodes. I've probably got 50 tapes of old westerns. And one day when I retire, I'll sit down and watch them.
And if you were thinking about inspirations in life, Tommy, would it be a John Wayne? Would it be a Fess? Would it be?
Sure, I think John Wayne. I don't know about the real life John Wayne. Marion Morris was his name, but as far as the character that John Wayne portrayed, I think that's the character this country was built on, and I think that's the way that most people would like to see themselves, or at least deal with people with that kind of character and principle. So,
character and principle are key words. Thinking about treating people right, and the growth will come. You see it in Sunbank. It's happening there. It's happening on the South Strand. It's going to continue to happen. It's guys like Tommy Bouchette that make it happen. Tommy, thanks so much for being with us this morning.
Thank you for having me.
Absolutely. Stay tuned to more Carolina People coming up next. We want to thank Tommy Bouchette, all the shareholders, board members, and customers of Sunbank for making today's Carolina People so special.